Guys, what's going on? My name's Ryan. I trade ETFs and I like to make videos to show some of the technical analysis that I'm seeing in the market today. So today we've got XIV, inverse VIX. It's funny how they do that because the VIX is VIX, the inverse VIX is XIV. So let's get started. Here on the daily chart, we can see this long-term uptrend. I think we're up something like 400% this year so far. We can see some pretty firm support and resistance lines. This resistance marked by this red line, we've gotten rejected off of it several times now. And the support line marks an area of consolidation down here below. One major divergence that I've been watching play out for a long time now is marked by this blue line here. As far as our RSI goes, we can see that back here in March, we made a high of our RSI of about 80, and we have yet to test that 80 point again. We've actually been moving consistently lower ever since, while price has been moving consistently higher. Since our indicator is moving lower and our price is moving higher, this is a divergence here. So let's go to a shorter time frame. Let's go to the 2 hour and check out what's happening. So here in the 2 hour, I've just marked some more Fibonacci levels. This was our previous support level, our previous resistance level. And it looks like this bottom support is our 38.2% fib. This is our hard support level. This middle support level is 61.8%, another pretty substantial consolidation zone. 78.6 has seen very little consolidation at these levels, and our 127.2 fib has marked as pretty hard resistance at this point. We bounced off of it once, twice, 3, 4 times, and it looks like we're making a run for our 5th time. Now, volatility right now is one of the most interesting ETFs that I have to analyze just because of what's going on in the market right now. I think that volatility cannot remain so low just because of all the political unrest that's going on, the rate hikes, and everything else that's going on. Volatility has remained unprecedentedly low for the most part. Another divergence that I'm seeing here is from our CCI. You can see back here that we had our highest CCI, and ever since then we have yet to retest that. We've just been moving lower. While price has been moving higher, this is a divergence. So what do I expect to happen? I do expect volatility to increase in the short-term to medium-term future, and I am in some volatility ETFs right now. I'm playing UVXY, and I have been. I've got a pretty nice average, I think. What is UVXY at? I've got an average down here of, I think I'm about 10.05, but I'm fairly comfortable in it, and I'll explain to you why. So remember that I said that this was little consolidation, this was substantial consolidation. We can see that price has come up and tested these levels many times before, whereas here we've only tested it a couple times. It is still significant, but not as significant as down here. Down here is our hard support area. However, on the 2 hour chart, I can see us falling down to this level of substantial consolidation, which would also be the bottom of this channel. Taking everything into account, you gotta recognize that this channel is very important. And if we were to fall to 38.2, that would be fairly scary because that means we would break out of this channel. So for the medium-term future, I see us falling down fairly significantly and then coming back up to retest this previous resistance level, and we might break out from that point. So the 1 hour. In the 1 hour chart, I was seeing a lot of similarities for a long time that we did over here. We had this big burst up, and then we had 4 kind of humps going into this. I've been saying for a couple weeks now in my videos that I see this again here. We shoot up, and then we see 4 humps again. However, I think that this is starting to turn into a different pattern than this was. It looked a lot more convincing over here, which was my last video. However, since we've stalled and moved sideways, this is a new pattern that hasn't played out over here. So I'm going to go ahead and dismiss the significance of these 4 humps. And I guess I don't have a whole lot more for the 1 hour chart other than a new divergence here in the CCI. We've been moving lower. And here it is again on the RSI. We've been moving lower as well as price moves higher. So let's go to the 30-minute chart, the interesting stuff. And this is my ultimate theory as to what's going on with price right now. So I think we are in a very clear diamond top right now. I say very clear because sometimes they are very short term. I see a lot of diamond bottoms on the 5-minute chart, maybe sometimes the 1-minute chart, and those will just be a day-long pattern or so. However, they are very rare to spot on higher time frames. I wouldn't call 30-minute a higher time frame. However, this is a 3-week pattern that we have going on here all the way from June, and the next week will be, the 19th. So why do I think this is a diamond top? Diamond tops usually touch either sides 7 or 9 times before breakout, and I have both drawn here, the 7 or the 9. But let's stick with the 7. So we kind of come up into price here and we go 1, 2, 3, 4, 5, 6, 7, and then we drop down is what is supposed to happen. So what is the actual legitimate textbook definition of a diamond top? So Bulkowski's research states that the diamond top breaks downwards 69% of the time, and the diamond bottom breaks upwards 69% of the time. The majority, 58% of diamond tops, are preceded by a steeply rising trend, which increases the likelihood of a break downward and a mirror of the prior upward price movement, i.e. 82% of the time the downward move will be at least the same percentage move as the upward price move leading to the diamond top. And Bulkowski emphasizes that the diamond bottom or diamond top with a breakout move downward is ranked as being one of the best performing patterns out there. There is a retracement often after hitting the bottom of the triangle to the point of breakout, and these are very common. So what that last line is referring to is once we break down, we'll hit the bottom of this triangle and then come back up to retest this before heading lower. That's very common. And what everything else is basically saying is that the steep rise up into the pattern, the diamond top, will be mirrored on the other side here, and we'll go back down to the bottom over here. Another interesting thing to note here is that I've got these equidistant times drawn here, which have measured, some fairly significant bottoms and fairly significant tops in the past. We have a bottom here, a bottom here, a bottom here, and over here is our next one. We haven't quite come into it yet. It looks like it'll happen on Tuesday is when we will hit it, but it is near approaching at this point. So on the 15-minute chart, what Bulkowski actually recommends doing is drawing two lines coming out of where, if it's an upward trend, you draw these upwards. If it's a downward trend, you would draw these as an extension of this resistance level and this support level. So I did that here, and this will mark the, kind of a contained area for price to run and what I'm expecting to see. I also did some extra research on measured moves for a diamond top, and it looks like you go from the top here all the way down to the bottom of the trend, and then you drag that over here to the point of breakout. So my first target here for UVXY or XIV is going to be right down here, which is our 78.6% fib level. This marks as a support level, and I can see us dropping down into my first target before bouncing up, getting rejected off of this extension here, and then moving down here to target 2, which is the 61.8% fib level and in a region of more consolidation. If we were to mirror the other side, we would come all the way down here to this 38.2% fib level. However, I'm going to be taking money off the table here at this $8 drop from $82 to $74 down here. I think that capture the meat of the move, and you get what you get, and you don't have a fit. If I miss out on this extra $4 down here, I will be perfectly fine with that because I'll start adding onto my XIV position at this point. I'll be bearish up until here, and then anything over here I'll be interested in buying at lower prices because XIV, like I said, is up 400% this year. Anyways, this has been my analysis on inverse volatility. I expect volatility to increase dramatically here in the coming weeks. If you like this video, please like and subscribe for weekly updates. It really helps me out a lot. And good luck in your trading for volatility next week, and have a happy Father's Day. Thanks. Bye.